Hey guys, Luis Moreno here, Simply Health Insurance Agency. Great question from one of my agents. All right, here's the question. Okay, this was provided to us from our support and training platform called School, where all of our agents get asked their questions and I answer them. It's where we do our Zoom trainings. We really do support our agents. So if you guys are not getting supported at ACA, you may want to consider coming to us. Anyway, here's the question, guys. So the question is, if I have a client who declares $20,000 as his projected household income, they get a premium tax credit. And when they file their taxes the following year, they're actually at $70,000. The question is, will he have to repay that tax credit he got at the end of the year? Or will they just raise the premiums going forward for the following year? Very good question. All right, I'm going to answer that. But first, like, comment, and you better subscribe to my channel or else. All right, let's answer this question. All right, guys. So number one, that's a huge discrepancy. They're at 20 now, but they finish at 70. Unless they got a $50,000 bonus, they probably know they're already at 70,000 or close to it. So technically, in order for them not to have to pay back a huge tax liability for these subsidies that they received that they shouldn't have, they should have reported a life change and updated their income. That way, the subsidies could be more appropriate based on their income. Okay, that's number one. But a lot of insurers don't really tell me or don't update. They just file at the end of the year. They get a pretty nasty surprise. So it's kind of like a seesaw, guys. All right. So this is the way I see it. All right. At 20,000, and I'm just going to make up some, you know what? I'm not going to make up some numbers. I'm actually going to show you all what that really means. Hold on here. Let me, maybe showing you guys is not the best way to go about it, but here we go. All right. Let's go run. I'm going to share my screen with you right now. And I'm going to explain the scenario. All right, let's get in here. And let's get in here with a 35-year-old making $20,000. Okay, and let's assume that they have this particular silver plan right here. Let's just go with this first one. All right, so they've got this plan right here. So they're paying zero for this plan. Now, based on this $20,000 of income, they're getting $384 of subsidy. Now, this is why their premium is zero. Okay, so they're getting that subsidy every single month. So remember, $384. Let's assume that this thing started in January, the full 12 months, just to make our math easier. Now, if you started mid-year, whatever, you can do some prorating calculations. But to make this simple, we're starting January 1. All right, so 384 times 12, that's $4,608 of subsidy they received. Now, at the end of the year, they're at 70. Okay, well, look at that. At $70,000, this person gets no subsidy. So what's going to happen? A good and a bad thing is going to happen. Okay, let me clear this out. All right, so number one, that entire subsidy that they received, this $4,608, they're going to have a tax liability. They're going to have to pay that back. Okay, if you're being told by your upline, oh, they don't have to worry about it. Wait till this guy comes and finds you, and then you'll worry about it. Just kidding. But hey, I've had them come in, but I clearly tell my insurers, look, if you have a huge change in your income, you better come let me know. All right. Otherwise, this could potentially happen. So this person at 70K is going to have to pay this $4,608 back in the form of a tax subsidy. Now, do they get penalized? No. Do they pay interest on it? No. But they're just going to have to pay it back on their tax return. Okay. Now, the other question I get, well, when they were at 70,000, look at the out-of-pocket 8,900. Okay. When they were at 20,000, the out-of-pocket was 28. Are they gonna, if they had some hospitalization bills, is that going to adjust, and are they gonna, oh, no, this thing, the medical portion is already set for that year. So they're not gonna go back and change and say, oh, you should have been at, what was it? You should have been at figure this out, come on. You should have been at 8,900. You were at 2,800, so you owe the hospitals money. No, that's not going to happen. The only thing is they're going to have to pay those subsidies back that they did not officially qualify for. Okay. Now, what if, let's just make this a little more complicated. What if they were at 30,000 instead of 20? All right, well, let's do some more math. So remember, at 20, they got 384. Okay. All right. At 30, they got 313. So 384 minus 313, that's $71 times 12. So they're going to owe back $852. So a $10,000 difference is not that bad. Okay. So it's kind of relative. Now, me personally, I tell my insureds, look, if it's, a 10% increase, do we really have to report it? If you want me to, sure, I'll do it. But once we get above 10% of an income change, yeah, you know what? Unless you want to have a tax liability, assuming you make more. If you make less, you could get a tax credit. But if you make less, also, let's just assume that, let's reverse this math. So let's assume that they're at 30. Okay, look at their out of pocket, 7,200. Their savings, they're getting $313 in subsidies. Let's reverse this thing. Okay, so let's say that they're going to have a bad year in sales or whatever, and they're only going to make 20. I would update this thing immediately, because look what happens. Number one is they're going to get more subsidy. We already know that. But look at the out of pocket. We're at 72 right now. Okay, at 20, this thing dropped to 2,800. That's a huge savings. If he waited to the very end, and let's assume he went to the hospital or she went to the hospital, they would have had to have paid that higher out of pocket. Well, by making the adjustment now, then they get to the benefit of having a lower out of pocket if they feel that they're going to finish at 20K. So it's kind of an it depends scenario. So ultimately, guys, here's what I tell my agents, our agents. Don't screw around with people's income to get them something that they don't deserve. Okay, it's going to haunt them. Okay, just imagine if you're expecting a huge refund and you've got to pay a ton of money, or let's assume you don't get a refund, but you're like right on point with your taxes, and now you have to pay an additional amount because you miscalculated your income, or the agent just put a magical income. Ooh, get ready. All right. So never manufacture income. Talk to your insureds. Okay. Find out what their income is. Okay. You can coach. Okay. I do coaching all the time. Look, your income is this. Now let's kind of pre-plan. Let's look into the future. What do you think you're going to make this current year? Is it the same as last year? Okay, if they don't have enough, hey, do you think you can pick up an extra job? Maybe you take less deductions to get that income where it needs to be. Coach them, do some planning. Because at the end of the year, guys, I've seen it. I've seen organizations, oh, don't worry about it. They won't have to pay that back. That's a bunch of BS, okay? A lot of these guys have to pay that money back. Now, if they don't file, they don't file, okay? But when they do file, you think the IRS is going to forgive that? It's going to be on there somehow. Okay. I'm not a tax guy, but I am not in a position to screw around with people's taxes and their money and their refunds and their liabilities. I just don't do it. I just do things right. Okay. So that's what I recommend for you guys. Talk to your insureds and make sure you get the correct income so that you're not putting them in a bad position. Hope that helps you out, guys. A couple of final things. Okay, down below, do me a favor. I got goodies for you guys. I got my ACA 101 course. Okay, if you're not with me, but you want to learn how I do business and how I write a ton of business, I got my course down below. Secondly, I've got my CRM. Oh, baby, this thing is a moneymaker. If you use my affiliate link, it's the same price as if you didn't, but you get all of my workflows for ACA, Medicare, life, auto and home if you wanted, dental and vision, whatever, I give them to you. And lastly, I have information on my course, not my course, a course that I promote. It's a lady who helped build my Facebook ad campaign. So she created a course for agents who don't know how to do advertising on Facebook and Instagram. We sold a little under 1,400 applications. I think that's huge. I keep saying that. Well, for me, that's huge. That's about $400,000 in income. I love it. Okay. She helped me do that. And she got my ad cost down. And then I added a twist to this course. I added my own touch on it where I promote the agent CRM and I show you guys how to take those leads, dump them automatically into agent CRM and have my workflows to work those leads to prep them for you. So guys, man, take a look at my information and don't forget, subscribe to my channel. I need to spread the word around. I got lots of good ACA stuff. And then also, please, like and comment. I do check everything. Thank you, guys.